right. Uh, Welcome to LeapMeet 59, everyone. March 2022 TradeLog review. And at the end of the TradeLog review, we will have a Q&A session where you guys can ask any questions if you have. We also have a special announcement today. So stay tuned for that. We'll do that at the end of the day, at the end of the webinar, I mean. All right. So let's get started. Let's get started first with a little bit of looking at what type of month we have had so far. Can you guys see my screen? Awesome.
Yes.
So as you guys know, past few months has been very tough. Pretty much since November, starting of the November, the market has been very tough. Beginning of inflation, the trade war with China, U.S. Russia, Ukraine Russia war, Fed thinking about raising interest rates, so the whole drama around it. So pretty much starting November, it's been very unstable. And as you can see, so October we saw market. This is the daily chart, daily candles on monthly. So October started here, for most part it went up, and this is where everything started pretty much getting tougher and tougher for us to make sense of the market. So November it went up, traded sideways, pulled back down. December, once again, it went up, pulled back, went up again, and then pulled back again. January was the most toughest month since March 2020, where we saw market drops quite significantly. Same thing happened again in February, where it dropped quite significantly. And then starting this month, it dropped in the beginning, made new lows. Well, not new lows, but touched pretty much previous month's lows, almost close to it. And then last 2 weeks, like probably most, like this is March 14th was the red candle. And since then, market just staged this amazing rally for last 2 weeks of the month and pretty much recovered in all the SMA levels. So right now, this is the 50-day SMA. It was dropping since the January. Now it's pretty much going sideways. This is 200-day SMA. It's still moving up a little bit now. This is 100-day SMA, which is also stabilizing. So it recovered most of the losses. And at the end of the month, it closed. End of the month was April 31st, right here, where it closed above all three simple moving averages, which is a good sign. So nice recovery. 3 months of losses recovered in 15 days, pretty much. Not all the way, but we're getting there. Now the market is in a position where it's strong. And if you guys remember, I told you probably beginning of the March, where I said that your job as a trader and as a trader who is dealing with a bear market first time, because most of the members of our group started trading after March 2020. So you guys haven't really seen a true bear market or market going down, because as you all know, since March 2020 lows, we have constantly been going up. And if market goes in the correction 5 to 10%, I have seen it in many groups on WhatsApp and all that, that people start freaking out and they ask questions like, why is it going down? Well, contrary to popular belief, market doesn't always go up. It does have to go down, consolidate, correct itself, and then go up again. So your job as a trader is to survive, to trade another day. And that's exactly what I said at the end of the February and March, that we are getting near the point where it could be stabilizing a little bit. It already absorbed all the volatility and all the big news that were coming out, and wasn't reacting as strongly as it was before. But point I'm trying to make is that if you survive this 3 months, if you know what to do, how to control yourself, how to manage your risk, if you follow all the rules, and if you just survive this downturn and this choppiness, then there will come a time where you can recover strongly and you can make most of your money back. And that was the period that we saw last month. Like I usually say it like putting your hammer down period. So basically you go all out meaning that you still follow the rules, but you take a little bit extra risk. So that's what we saw. Now we are in April. First day of April, we saw a little pullback, and then market bounced back again. Now we are sitting right over 200-day SMA and right between 200-day SMA and 100-day SMA. So going into next week, if we stay over this 447 level, then we could be starting either consolidation on the sideways or on another bounce back on the upside. Again, this pullback that we saw at the end of March was most likely due to end of the quarter, people repositioning their position, taking some losses, closing some positions at the end of the quarter because they have to, like big hedge funds and all that, they produce quarterly results to their investors and people who gave them money. So they have to tell them. So at the end of each quarter, what they have to do is they have to close some positions, provide some numbers. And in order to do that, they have to buy and sell large quantity of shares. So nothing out of ordinary. Even if we pull back to 50-day SMA, like around 440 level, it's still fine after the rally we have seen. A little bit of pullback is nothing crazy, and especially after the 3 months period that we have seen where market has dropped so much, a little bit of pullback is not out of ordinary. We're still not out of the woods yet, so you still have to follow rules. You still have to be very, very careful. That Russia-Ukraine war situation is still looming on our head. So if some big developments come out of that situation where Russia retreat or fire a nuclear weapon, for example, those are big developments. So that could have a big positive or negative reaction from the market. So we always have to be prepared for that scenario. So that's when the rules comes in the picture, where you don't overexpose yourself to the market, where your position size is proper, where you're managing your risk properly, not taking too much extra risk. All those rules will save you if and when market turns against you. And that is why it's so important. But one of the most important rule that you'd have to remind yourself every day is that you need to stay in the game. You need to live, your account needs to live to trade another day. That is all that matters. So don't ever go all out. Don't ever go all in, and don't ever open 80% of your account, expose 80%, 90% of your account on one day just because you had a strong feeling that market is going to go up. Okay, so I just wanted to discuss where the market is really quickly, and then we are going to switch over to our trade log. So February, let's just take a glance at the February trade log. Look how it is. Like, we had a good first week, and then we had some struggle, and towards the end of the week we recovered nicely. So going into March, we started off strong, but then March beginning was a little bit rocky. We saw this 3 red days where everything went against us. Market just dropped out of nowhere. Russia and Ukraine situation at that point was still developing. If you remember the beginning of the March, which is about right here, we started going up, but then there were like some downturns. Sorry, this is right here. So we started strong, and then we saw this huge drop in the market in the middle of the week. Due to the Russia-Ukraine situation, it was still developing at that time. Market was still reacting very strongly to it. So that affected our trades. And once we saw that market is going down, we stopped, took these losses again, because we didn't overexpose ourselves to the market. Those losses were, even though we lost 100% of the money that we put in, those positions were quite small, dollar, 0.50, 3.2, things like that. Even though you lost money, like for example, if you have, as I say, you have a $10,000 account, right? Our rule is that your position shouldn't be more than $700. So if you lose this 3 position, you made some good, decent money here, and then you lost about $1,000 to $1,200 here in this on one day. Now, with this profit and all that, you probably lost 6 or 7% of your account in one day. Now, ask yourself, is it salvageable situation? Can you recover from this blow? Absolutely, right? $600 or $700, even though you lost that in one day, probably like 6 or 7% of your account, recovering that, maybe if you just look at this one, you made about $700 in this one day right here, just by following rules. So it's 1 or 2 good day of trading and you will recover from that blow. And that is why managing your risk is so important, because if you don't, and if you were to oversize it here because you had 2 good days and you're like overconfident and you're like, you know what, I'm going to size up, market is strong, blah, 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 blah. So instead of this 400, you double your position to like 800, double your position to like 600. And all of a sudden your loss that was like 1,000 to 1,200 becomes 2,500 or 2,000. And now it's going to take you almost a week to recover that money. It takes a longer period of time, more good trades and all that sort of stuff. And not only that, it also affects you psychologically. Trading is 70% psychological, in my opinion. And that's my personal opinion, because the rest of the 30% is like technical analysis and this and fundamental analysis and researching the stock and understanding the stock, and all that is 30%. The 70% of the portion of trading that you do every day is you against you. It's all about the psychological thing, where you have to calm your nerves, where you have to stop yourself from going crazy and average down big time, or take a big position, or react to every single emotions you have. You're scared, so you get out of position early, don't follow the trade plan. You're hopeful, so you size up, average down. You're unsure, so you don't take the position that you should have been taking. All that's emotions is 70% of the trading. You have to control, you have to learn to manage those emotions and that psychological part of the trading, and then you will be successful. The rest 30%, anybody can do it. Anybody. None of us are stupid. None of us are high school kids. We have gone through life. We have studied our butts off. We have made career for whatever field that we are in. We're smart people. But why people still fail at trading, even though they are super smart? It's because they only focus on 30% of what's important and ignore the other 70%, where it's all that makes the difference. So that 70% is where you need to control. And this is a great example of it. So when you're down, you don't start reacting to every emotions you have, especially when money is involved. People get hopeful, people get scared, people start freaking out and all sort of stuff. Your job at that point is you against you, and you have to stop yourself from reacting to it. So market is going down, step out. And that's why I always say, excuse me. That's why in the room, I always mention like, okay, market is getting choppy. Now it's time to step on the sideline. And why do I say it? is so that you guys know that market is not as easy as it was 2 hours ago to trade. And now it's your job to stop yourself from over trading and stop yourself from over analyzing the situation and stop yourself from taking trades and seeing setups that are not really there. So that all matters. So that's why, and that's what we did here. We stopped, we took the losses, not that big, and we were like, okay. And then Friday comes around, we took like a smaller position again. Some Amazon was running on that day, so we made some decent profit on that one, but that was it. Week 2, another good week for us. This is where, again, Amazon was starting to bounce, as you guys can see. Week 2 comes in around right here. So after this downtrend, we started seeing the uptrend. So this was the week 2 here. But in the same time, Amazon started making this huge move on the upside, March 8th. So this was week 2. March 7th, they pulled back about 2,700, and then it just started going bonkers. And that week, it made a huge move from almost 2,700, let's say, to $3,300 move in a pretty much 3-day period here. And we absolutely banked on it. As you can see, Amazon. We were trading it left and right, and that's another important lesson. That, oh, sorry, not that. I'm going for here. Amazon, like that particular day, the Tuesday, Monday and Tuesday is where we exclusively traded Amazon and nothing else, because pretty much Microsoft and AMD here on Tuesday, but other than that, it was all Amazon. We were just nailing it left and right because it was so strong. And that was Amazon's day. Now, there are 2 things you can do here. If you have a smaller account, then what you need to do is you basically just wait around and not take any trades, and this column represent that. So the only trade that it took in this column shows Microsoft, AMD, because those were our position size, and this one trade on Amazon that we took on Monday. As you guys remember, it was a lot of trade, and we made a good money on that one. But that's all. That's all you can do, and that's fine. You are trading your own account. This is your journey. Doesn't matter if I was trading Amazon left and right, doesn't mean you have to too. You can still make money without it. And at the end of the day, if you go through all this list, and as you can see, the 700 positions limitation didn't actually make that much of a difference at the end of the day. You still end up pretty close to what you would have if you didn't have that limit. So why risk, right? Like, why risk it so much? Why take additional amount of risk? If you have $10,000 account, you shouldn't be taking this $1,500 position, because that's 15% of your account. One wrong move, Amazon come down crashing or go up crazy, and this position will go to zero and you will lose all of your money. 15% of your account on one day. And for what? At the end of the day, you're still pretty close to what you would have if you didn't do it. So that's the lesson here, that you don't have to take every single trade that someone else, including me and LeapMeet, is taking. You need to trade your own account, and we have plenty of positions. As you guys can see, we have $33 position, and on the same day we have $1.60 positions. So if your account doesn't allow you to take this big position, don't take it. Take the $1.60, take $2, and you still end up about $500 up on that, or almost $300 up on that one day. For a $10,000 account, that's a decent gain in a day, right? And same thing. So that was a very good day for us. Wednesday, another solid day where we started trading. And if you guys can see, we traded Amazon in both directions. Monday puts, calls, puts on Tuesday, and then calls again. We were changing our bias as Amazon was moving up and down, and the same thing we were doing actually everywhere. Again, on Wednesday, we play puts in the morning, and then we changed the bias to calls, and then we nailed that one too. Both of these positions were like pretty fairly less expensive than what it was on Tuesday, and we nailed those too. So now so you missed almost all of the action on Tuesday because your account didn't allow it. Come Wednesday, you were in the game. We're taking smaller positions, so you can take this position and you can still make decent gains, and bam, that's all you need. You need 1 or 2 good days a week, or 3 or 4 good days a month, and you're set. You don't need to trade every day. You don't need to take exceptional amount of risk in order for you to make a decent amount of money and decent amount of return on your investment. This is where rules comes in the picture, and this is where that psychological aspect of your trading comes in this focus. Because if you were to be someone who doesn't have control over your emotions, you will come on Tuesday, you will see that people are making lots of money on this Amazon, and you will start trading it even if you shouldn't. And yes, you probably would have made money on that particular day if you took that risk, but it only has to not work like once, and you will blow up your account. So that's a lot of risk that you're taking for a small gain. This is where that whole psychological component comes in the picture, where you need to control your emotions. And one of the most difficult emotion to control is greed. You see everybody else making money, you see everybody else nailing trades left and right, and that greed start to creep in, and you start to forgo all the rules, and then you start making mistakes and blow up your account. So that greed, fear, all those emotions, very, very important to cover and have that control over. So a solid week, only one bad trade, and even that was very small position. We had a stop loss in place as well, so we just stopped out and all is well. But this is what putting a hammer down look like this week 2. Comes week 3, this is where it looks like putting the hammer down. This week we took about 30, 24, 20 something trades. Week 3 we took about 30 plus trades in a single week. Why? Because market was fantastic. So we were managing our risk, but at the same time, we were taking full advantage of the market and the opportunity that were present there after almost 3.5 months. So we weren't going to let that slide. So we were going at it. But how did we go about it? If you go back and look at the trade log and everything, at any given point, we did not have more than 3, probably 4 position open at a single time. And why is that? Because even though market was good, even though we were trying to take full advantage of it, we were not going to let go of the rules. And one of the rules that we have is not exposing ourselves and our account like more than 30 to 40% of your account to the market. So that was one of our main rule, and we were not going to break it. So even though we were taking full advantage of it and trading left and right all day long, at any given point, we didn't have more than 3 or 4 position open. And that is a very important thing for you guys to remember as well. So if you have a $10,000 account, your rule should be, I should not have more than 2 positions open at any given point in time. So if market goes against you, you are not overexposing yourself to that downturn, to that initial insane amount of risk. For me personally, the reason why I am here where I am right now is because I learned to trade by following the rules and managing the risk, and stay to survive another day, or always have the backup plan. So any time I went all out was because, okay, if this doesn't work, I will survive, I will be okay. And that is the most important thing that you need to know. Survive to trade another day. So we come week 3, there is not much to say. We put the hammer down. We traded anything from $2,200 call to 54 cents call, a dollar, even 45 cents call, and made 133% on it. The first exit, still the rule applies almost always 20, 30%. Market was good, so we were following that. 12% sometimes. But at the end of the day, we did good on that particular week. We still had some losing trade, but when you take 33 trades, 34 trades in a week, 2 or 3 losing trade is quite acceptable. And even with that, we followed our stop losses and stopped out on time. So no big losses. Excuse me. But at the same time, we had some huge winners: 133%, 300%, 160%, and then come Friday, 200, 122, 60, 60, 75. So we made huge gains. A lot of positions ran up big time. But even if for $200 position, 200% position, or even 300 position, the first exit was at 36%. And that is another important thing that you need to keep in mind, that always learn to take profit regularly. You have to pay yourself. If you don't book the profit, it's not a profit. We come week 4, another solid week. Another week where we put the hammer down. Huge TradeLog, as you guys can see. Big wins as well: 126, 100, 100, 105, 100, 110. 2 losing trades. Not much to be said. Market was just going bonkers, going straight up. We were taking full advantage of it. So it's been a great month. And then come week 5, this is where market started to slow down a little bit. And first couple of days were okay. And then as you guys, I need to cancel this. As you guys know, last 2 days were red days, so we traded accordingly. Remember, one of the rules is that you observe overall market and what market conditions are. So when market was giving us good sign and strong sign of reversal and moving up or down or whatever, making big moves, we were putting the hammer down and taking full advantage of it. But as soon as market said, like, oh, okay, it's time to slow down a little bit. We have been running up for almost 2 weeks now, so there might be a correction. It was giving sign of weakness. We slowed down, and then two trades a day instead of 10 trades a day. We cut it down. We cut down the risk. We weren't gonna go all out here just in a hope that market will bounce back up next week or something like that. It doesn't make sense. Market is still volatile. Anything could still happen over the weekend. So there was no sense in taking position for next week in a hope that market will go bounce back up. So we took very small positions here. 1 losing trade, but only 3 positions a day, 2 positions a day. But compare that to here, where we took almost like 10 or 11 positions each day. So that is the difference that you need to keep in mind, that when overall conditions are not in your favor, you slow down. You manage your risk, you cut down your position size, so that way you protect yourself from any big downturn. Another very important thing. But overall, we had a great month here. Absolutely fantastic. We took full advantage of it. I am hoping that you guys did as well, because our win rate, we took 115 trades in total during the entire month, which is a lot. Let me tell you, we have never taken this many trades before in an entire year of a year-long history of TRADEORE. So huge month. 104 winning trades after 115, 11 losing trades, 90% success rate, only 10% failure. In trading, if your win rate is anything over 70, you are part of the top 10% of the traders. Over 90%, you're part of top 1% traders. We are in top 1% right now, this like last month. So there is absolutely zero reason for you to be in the loss last month. You should all be in the money. And if you didn't take advantage of this, reach out to us, ask for help, ask us, ask other members, reach out. Don't keep it in yourself. Beat yourself up that everybody else is making money. I should be making money too. Why I didn't make money? This is not for me. I'm not a good trader. I'm this, I'm that, I'm a failure, whatever. Don't beat yourself up. Everybody make mistakes. I did too. When market was going up, I was losing money when I first started because I was making mistakes left and right. So that is common. What you need to do and what you need to make sure that you don't do is that you don't beat yourself up and blame yourself. Instead, tell yourself that you're still learning and ask for help. That's why we are here. This is the whole, our main goal here is to create an environment that is safe for everyone and like a family sort of vibe where everybody is helping each other get better. So that's why we all encourage, we encourage you all to post your profit and loss in the closed position, post your trades as you take it in the open position, write down what you see. It's not because it's like, it's not because we want to keep an eye on you, but it's because so that people can learn from your success as well as your failure. Something didn't work for you, you write it down, you tell other people, you're reminding yourself that this didn't work, and other people are learning from your mistakes. The rules that we gave you guys for over the years, we learned that. I learned that hard way. Nobody was there to teach me in early years until I found a mentor who corrected me and who taught me how to trade properly. But until then, I was just doing whatever the hell I wanted and losing money left and right. But once I reached out for help, once I focused on learning and getting a better trader, and that's when I saw the change in my trading style as well as my results. So don't be afraid to post in the room. Don't be afraid to ask questions in the room. Don't be afraid to post your profit and loss. Nobody is winning 100% of the time. If someone tells you that every single trade that they took was a winning trade, they are lying to you. And if I were to tell you, or if I were to go out and tell anybody that like, hey, my win rate is 91%, they probably would not believe me and laugh at me. But there is a documented history in TRADEORE. Like every single trade we posted, there is a timestamp on it and everything else along with it. So you guys can believe it. You have seen the entire month with your eyes, the trades as we take it. So it's not impossible to get close to the perfection, but nobody is 100% perfect. If you see us ever at 100%, there is something wrong. Or anybody who says that, oh, every single light trade I took this month worked out, it's an anomaly, let me tell you that. So point I'm trying to make is that everybody fails. So don't be afraid to post your losses as well. Post your losses, post your wins. Nobody wins 100% of the time, so we don't expect you to win either. But share your learnings, share your losses, share your profits, celebrate it, help each other out. And that's how all of us will be successful. And that is what I'm trying to tell you here. But if you struggle this month, reach out to us, reach out to someone, ask for help. That's why we are here, and we will help you. because our goal here is not for you to make money, but also be a better trader so that 3, 4, 5, 6 months down the road, you can take trades on your own and you won't need us anymore. That is the ultimate goal we have here at TradeOre. But that's it. So it was a good 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 month so far. And as we just discussed, that we want you all to be more active, more proactive, share your losses, share your win, help each other out. With that spirit in mind, we are announcing this one contest which will run every month until we tell you guys that we have stopped. And that contest is Trooper of the Month contest that we are doing. We will post all the details, rules, etc., along that is involved in the room. So just look out for it. But basically, our goal here with this contest is to encourage you all to be more mindful, to participate, learn from each other, teach each other, encourage each other, celebrate each other. That is the main goal here with this contest. And hopefully this will be an additional motivation for you guys to pay more attention to being a better trader rather than just following the dollar sign. That is our main goal here. We all want you to be more active, more involved, more more open-minded and help each other out. And that is the main goal here. The details about this contest will be posted shortly, but it will run every month until we stop it. But for now, it's the monthly contest for every single active member in the Option Plus trading community. So just look out for the detail. And we are very, very, very excited to announce this. And hopefully you guys will be pumped up and take full advantage of it as well. With that, you guys have any questions? Now we are doing the interactive Q&A session. So, excuse me. Feel free to post any questions you have in the chat room or unmute yourself and ask it. All right. If you guys don't have any questions, we will go ahead and end this webinar here. Hopefully you guys learn another thing or two or recalibrated yourself, as I usually like to tell myself when I'm rereading all the rules from time to time. I tell myself that I'm recalibrating for optimal performance. So hopefully this TradeLog review provided you with that new lessons or recalibration and made you more determined. Like I always say, if you have any questions, feel free to go ahead and ask us. But we do have one question. So bear market usually refer to when NASDAQ or any chart for that matter, but NASDAQ usually represent the entire market. Actually, let me read the question first. At one point, sometimes in March starting, it was suggested that NASDAQ has turned bear. Was this concluded by looking at one of the SMAs, price crossing 50 or 100-day SMA? Now looking at NASDAQ, is it turned back to bull? So let's go. I don't have the NASDAQ option on here, but NASDAQ and QQQ are pretty correlated. So we'll just look at the QQQ. What bear market is for most people is when a stock, or I mean, when the market drops 20% from all-time high. When it crossed 20%, it's in the bear market territory. So a NASDAQ at the beginning of the March went to 22% down from the all-time high. And that is why everybody was saying that it has entered in a bear market. And that bear market, as you all know, didn't last long enough. We recovered, and now we are well over the bear market territory. Now, is it in the bull market? Last 2 weeks were bullish. Bull market criteria is a little bit vaguer compared to bear market, but once we have an established uptrend, you could conclusively say that yes, it is in the bull market. So let's take a look at it. So this is the March drop right here. So once this correction was happening, this wasn't a bull market. But once we went over this previous all-time high and started making this new highs, and then consolidated and continue to go up. Let me share. There we go. So this is the March pullback. So up until it went to this point where it went to the previous highs, this wasn't a bull market. After it went up, this was a bull market. Then it consolidated. Now it's in this huge uptrend, which you can pretty much draw from about. So let's try and drawing it. So right here. So you could have drawn this right here, and then starting here, you could draw another uptrend right there. And then starting, this was the low and consolidation. So you could draw another uptrend right here. And then another pullback, and then another uptrend, and then another uptrend like that. So basically, we are making uptrend after the uptrend, a little bit of consolidation along the way. Now this is the characteristic of the bull market. But after that 20% drop, once we recover the all-time high and go over it, that is when we are officially in the bull market. Right now, we are in recovery mode. So if you guys can see here, the all-time high is right here. So until we cross that point on, we are still consolidating sideways. So it's the same way as you guys see here, for example. So we reached all-time high, and then we pulled back. This pullback was about 11%. So now, when we recovered, this isn't a bull market, this is consolidation. So this could go on and on for years. If the market doesn't have that strength to go over. So it's in the bull market every time it makes a new all-time high after pulling back significantly. So the bear market, has it ended? Possibly, because we are no longer 20% down, but has the new bull market or the new bull trend started? Hard to say at this moment, because what could happen here is that we can pull back down, go up, pull back down, and continue to consolidate sideways. So that wouldn't be a bull market. Once we go over it, there will be a trend, strong uptrend that suggests the bull market. So hopefully that was helpful and answer your question. Any other questions? All right, and thank you for joining us, guys. We appreciate your time and your effort to join us on this fine Sunday. Hopefully you will all enjoy your Sunday, rest of your Sunday, and we will see you all tomorrow when the market opens. Have a great day, everyone.